Hey, good morning, everybody. This is Chris here in Hawaii doing your London close trading session for the 7th of May, 2020. I don't know why I have it labeled as April. I gotta change that to May. It's early here. It's early here. Anyway, it's Thursday here in Hawaii, so we are going to get into it. So just starting off with the heat map, you can see that the pound's been sold off. The Bank of England actually kept rates stable at 0.1, I believe, and it was unanimous. So normally that would lead to pound strength, but it's led to some pound weakness here. CAD's been bought on oil increases. You can see the commodity currencies, Aussie, Kiwi, they're up slightly. Kiwi's only down against the other two commodity currencies. Dollar mixed, euro mixed, yen and the Swiss franc sold off for sure. Equities, Dow is up 260, VIX is down. Gold is up slightly. Oil's up 25.72. So in terms of just the sentiment and kind of looking at the analysis, like I said, it was pretty mixed today. The Bank of England was kind of the big one, and they actually announced earlier than usual their earnings announcement. So it was at 8 p.m. here, which I believe is the open of Frankfurt. So Euro continued to weaken. Just with the ECB ruling, it's still being sold off a bit. And then, like I said, the Aussie made some gains here. So an underlying thing on the Aussie was the U.S. and China being able to discuss the phase one deal on a call next week. So that, those are the first real talks since the outbreak. Also, China had a better than expected PMI data and 3.5% gain on exports in April against a forecast of an 11% decline. So how much can you trust the Chinese data? I don't know, but they seem to be pretty consistent on that one. So it's been a pro-risk sentiment, and like I said, that's been leaving the yen on the back foot there. So, job claims is the other thing to kind of look out for today. We have going into Friday on the NFP. That's going to be an interesting one. Other than that, there's really not a lot else going on until today. There is a French bank holiday and a UK bank holiday tomorrow. And then Friday, like I said, we've got the big NFP, and that's going to be some fireworks. It's going to be a very, very volatile session early on. So be careful if you trade the news, which this is why I like the London close time frame for me, because all the news, all the sentiment's been digested, and the moves are kind of set on where they're going to go. So you can look for good levels, and you can identify opportunities. And for me, once again, I don't need it to be super volatile. I'm not looking for action. I'm just looking for profit. That's the bottom line for me. So anyway, going into trades for yesterday, we had one winner, one loser, but the winner was more profitable than the loser with the risk to reward ratio. So I want to show you first the loser, and that was the Kiwi yen long. So you can see right here, and it actually ended up going our way, but it took a little bit of a dip further down before it dropped up. So that happens sometimes, and you just have to be prepared to accept that risk. Yeah. So you can see here it dropped here, and this is where I got out. Right here, because you can see it's dropped here. And I thought it might rebound right here, but they took it one leg lower here before they moved it in our direction, and look where it went. I mean, right on the number. Yeah. So that was a loser, and then the Aussie CAD was the other trade we had going on yesterday, and that was a winner. And you can see we took the trade right here yesterday, and it literally went straight down to our profit target. So that was a very, very nice move for us. Today I'm looking at the Aussie US. So I think the risk sentiment is going to be positive carrying on here. There's also a level at 64.36. You can see the volume right here as well. So that is that bodes well for us. You can see right here, 45. So I'd be a buyer at with a 15 pip stop. And then what we want to do is we want to go to a higher time frame because we need to see what the next level up is going to be here for us. Once again, I think China and the US talking is a good thing, and that is going to bode well for this. So I want to see where the volume's at for a profit target, and you can see the volumes are building up here at like 65.16, but the majority is at 65.40. So we'll go 65.38. So 15 pip, 17 pip stop with a, let's see here. We're looking at an 80 pip profit target. Now this one's probably going to take a day or two here to hit. So, traditionally the Aussie US doesn't move very quickly. So that's okay. And that's kind of how we want to trade here with this one. So go to the risk calculator, and you want to calculate what your risk is going to be. And I'm going to get in here on a buy. All right. So we are in. And like I said, you just want to set your profit targets here and your stop loss point. So the stop loss point should be at 36 is kind of where we want to hold our ground here. That's where the volume kind of dies down. That's the level that I don't want to see it close below. All right. So let's put this puppy in. Let's go down to the 30-minute. So we're going to shoot for 65.36 will be the level that we're shooting for on the target. We got in at 53. Okay. So let's put it in. Profit level 5, 6. And stop loss level is 64.36. Let's just make sure that gives us a fair, so 4.92 reward to risk. That's solid. That's what we're looking for. And like I said, we've got two levels here. We've got this big volume buildup here, and we've also got a support resistance level here at 64.36. So two levels that did have to break through in the opposite direction, and I think sentiment's favoring us here. So we'll keep an eye on that trade. Other than that, the one other trade that I'm looking at is actually I'm looking at a possible euro yen, but short. But I don't know if there's a good level for it to be traded on right now. I think the euro's fundamentally weak right now. I think commodity currencies are going to gain. Yeah. So I use the tool Auto Chartist from Awando. It's free. And once again, for me, I have pairs that I'm looking at, and what I'm looking for with Auto Chartist, it's not it's not a trading strategy or patterns. I'm just looking for levels. Is the pair that I'm looking at close to a level of support resistance that I'd be willing to risk my money in? And I think other than the Aussie US, there's nothing that I'm really interested in today. So Swiss franc's being bought up a little bit. I think the US is just being sold off. Let's take a look at CAD Swiss. That might be another one I'm interested in. You see it's a huge rise up here. I'd like to go long on this, but it's gone up too far. I'm not willing to get up at the top here because you can already see it's running into some orders on the other side here. So I think that's going to be it for us for today, guys. I don't think there's anything else that's worth trading. Just for curiosity's sake, let's take a look at the euro yen. I want to see what this one looks like. Like I said, I'd like to short this guy. Move. Nothing worth it. You got this huge level here that's 20 pips away. It'd have to break through that. I can't see it doing that. Not at the London close time frame. So we'll stick with this trade. I think this is a good one for us. And we'll keep an eye on the markets. If I see anything else, guys, as the session develops, I'll let you know. But I don't really, like I said, I don't really see anything else worth risking our money here. Let's see what the pound US is, because I'd like to short the pound US too. Nope, way down here. So I would have loved to have got up at this level here, right at this 20. Look at this level that I marked off yesterday. Look what it hit. That's crazy. It's so interesting how the markets do follow these support and resistance levels. And one tip I'd like to give you guys for today, just some food for thought. When you're trading, I want you to think about who's on the other side of the trade. Okay, so you got to remember, retail traders in general, 95% of retail traders lose. Okay, so if you want to be part of the 5%, you have to think differently about the markets. And you can't just go with the flow, because if 95% of the people lose, the 5% don't go with the markets. And so what moves these markets? It's the large banks. Okay, and the forex market is the largest market in the world, but these large banks, not only do they have liquidity and control the currency, but they can also see orders. So they know where there's large blocks of orders. They get all the order flow, so they can move it wherever they want, whenever they want. So that's why it's always important to have a stop, because if they want to make a big move, they're going to make a big move, and there's nothing you can do about it. Let's say you have $1 million account. That's peanuts compared to what these people are trading. Okay, let's say you have a $1,000 account, not even a blip. Okay, so what? And nothing against that, because once again, I started in that level too. But what I'm saying is the banks don't pay any attention to that. They're interested in liquidity, and they're going to move it wherever they want to move it. So you got to realize that, and you've got to find ways to trade with that move, not against that move. So, a lot of these patterns that you see are, moving average crossovers and overbought, oversold stochastics. And, if it's overbought, it shows you overbought. It shows everyone else in the world that it's overbought. And you don't think the banks know this? So if they're looking to get liquidity, how do you think they're going to do it, right? The other piece that they do, and this is why I'm just not a big fan of news trading, is, when news comes out, the news doesn't move the markets. The banks move the markets in relation to the news. So the banks are going to put the price on these currencies on where they want it to go after the new news release. So if you trade the news release and let's say it's positive, well, who says, okay, let's say there's a positive US dollar release. Well, who says it's going to go positive right away? The banks can do what they want to do with it. So, I'm not trying to be cynical on this, but I'm just saying, you want to make sure that you understand who you're trading against, because this is a large market and you can profit from it. And, Nick has shown this over a period of a lot of years, and so does the other mentors. But you just have to be smart about it, and you have to understand that. And by doing that, you can find your niche. And once again, you just want to stay off the radar. You don't want a lot of attention to your stuff. You just want to make money, right? And that's the key to this. But it would take a ton of money for you to gain the awareness of these banks. The banks are going to do what they do. So once again, even if you're trading for yourself, or even if you get a fund, chances are you're not going to be on these radars, which is a good thing, because you don't want to be, because they'll trade against you, and the banks can do what they want to do. All right, so that's my rant for today, my soapbox moment, and let's go back to our Aussie US, and we'll keep an eye on it. And it's already moved 8 pips, so let's hopefully it keeps going. All right, thanks guys, and any questions, hit me up in the member area. All right, catch you later.